Good evening, traders, and welcome back to the post-market analysis of Nifty today. This morning, our pre-market view was flat to negative with an expected downside of 50 to 150 points, and that's exactly how the market unfolded today. Let's break down how Nifty reacted to our key resistance and support levels, where the major moves happen, and what it means for tomorrow's session. Nifty opened around 25,150 zone, right near our baseline and R1 resistance of 25,262. As expected, the market struggled to sustain above the resistance band of 25,262 to 25,340, slowly showing early signs of exhaustion. The opening hour was volatile. Buyers tried to push it up slightly, but every attempt was met with strong selling pressure, especially from short-term traders booking profits near higher zones. By middle afternoon session, Nifty started losing momentum as global cues remained weak. Asian markets continued trading negative and European futures opened flat to red, reinforcing our morning view. Nifty gradually slipped below 25,100, testing our S1 and S2 levels 25,087 and 25,002. This zone acted as a temporary support for a while, but the buying lacked strength. We witnessed sideways consolidation between 25,000 and 25,150, which clearly indicated indecision among traders. Now let's connect today's price action to our technical levels. R1, which is 25,262, acted as the perfect rejection zone during the first half. The market later couldn't sustain beyond R2, 25,337, even in intraday spikes. On the downside, S1 25,087 provided minor intraday support, but once it broke, we saw a quick drop closer to S2, which is 25,002. So overall, Nifty respected our support and resistance zones beautifully. Resistance capped the upside, and support triggered a mild recovery near the close. Coming to global cues, US 30 stayed in the red around minus 0.4%. Asian markets closed negative near 0.6%. Europe remained flat to slightly weak, so international sentiment did not support any major upside today, which aligned perfectly with our pre-market view of a flat to negative Nifty session. So coming to the end of the summary, by the closing bell, Nifty settled around 25,050 to 25,100, down roughly 70 to 100 points from the day's high, precisely within our projected downside zone of 50 to 150 points. It was a classic sell on rise kind of market. Rallies faced selling pressure and supports triggered mild rebounds but no strong follow through. This tells us that short term traders maintained a defensive tone while long term investors stayed cautious ahead of key global data. So, what can we learn from today's movement? Resistance worked beautifully, like 25,260 acted as a ceiling. Support around 25,000 held for now, showing buyers are still active near that psychological level. Coming to trend confirmation, like flat to negative bias remains valid unless Nifty closes about 25,350 in upcoming sessions. Coming to the sector level, IT and banking stocks saw mild pressure while mid caps showed resilience, indicating selective buying interest. So our pre-market prediction of a flat to negative day played out perfectly. Nifty stayed range bound between R1, which is 25,262, and S2, which is 25,002, reflecting a balanced but cautious tone in the market. As we move into the next session, the 25,000 level remains a key support. A break below that could open the door to 24,900 or even 24,800. On the upside, resistance still stands strong at 25,262, 25,340. That's all for today's post market analysis. If you found this breakdown helpful, don't forget to like, comment, and subscribe to stay updated with daily Nifty market insights. Thank you.